Good morning, ladies and gentlemen. I am Marty, moderator for the conference call. Welcome to ONGC's earnings conference call for quarter ended 31st December 2025. We have with us today Sri Vivek Tongaonkar, Director of Finance, ONGC and team who will interact with investors and analysts to discuss Q3 earnings. As a reminder, all participants will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, please signal an operator by pressing star and then 0 on a touch-tone phone. Please note that this conference is being recorded. I would now like to hand over the floor to Mr. Sri Vivek Tongaonkar for his opening remarks.
Good morning. Good morning, ladies and gentlemen. I am Vivek Tongaonkar, Director of Finance, ONGC. I welcome you all to this ONGC earnings call for Q3 financial year 26. Thank you for joining us. I am accompanied today by my colleagues from ONGC, Mr. Satish Kumar Dwivedi, he is Chief of Joint Venture and Business Development, Mr. Ajay Kumar Singh, he is our President Planning and Transformation, Mr. Prakash Joshi from Investor Relations Cells, and Mr. Shekhar Mohanty from our Corporate Accounts. We also have our colleagues from ONGC Videsh Limited, Mr. Bhishma Dev Mandal and Mr. Basant Pasari. ONGC has compiled its financial results for the quarter and 9 months ended 31st December 2025. The results were released on the 12th of February 2026 through a press note and shared with the stock exchanges and analysts. I will now present the highlights of our performance. ONGC's standalone crude oil production continues to show growth momentum. During Q3 financial year 26, production stood at 4.592 million metric tons, while the cumulative output for 9 months financial year 26 reached 13.907 million metric tons. This reflects a modest increase of 0.35% over the 9-month financial year 25. Standalone natural gas production in Q3 financial year 26 registered an upward trend on year-on-year basis. This highlights ONGC's operational resilience. This improvement comes alongside the company's success in arresting the earlier trend of degrowth, with cumulative output for 9-month financial year 26 remaining steady, thereby reinforcing stability in the gas portfolio. During this 9-month period of financial year 26, revenue from new well gas crossed 5,000 crore rupees. This delivered an additional 944 crores compared to the APM gas price, reflecting the premium eligibility of new well gas. Notably, now the new well gas contributes over 18% of ONGC's total gas sales revenue, underscoring its growing significance in the company's portfolio. ONGC is actively working towards boosting the performance from new gas wells. ONGC board has declared a second interim dividend of 125%, amounting to 6.25 rupees per equity share of 5 rupees face value. This translates into a payout of 7,863 crore rupees on top of the first interim dividend of 6 rupees per share, that is 120%, announced in November 2025. With these two payouts, ONGC has achieved a historic milestone. This is its highest ever cumulative interim dividend of 15,411 crore in a single financial year, underscoring our commitment to shareholder value. With regard to KG 98/2, as you are aware, so far all the 26 wells have been drilled. I am happy to share that as per the latest update, SURF, that is subsea umbilicals, risers and flow lines, and the subsea production system, SPS, these works are nearing completion. The central processing platform, together with the bridge-connected living quarters and utility platform, have been fully installed. In January 2026, the main support frame, the living quarter module, was successfully pinned down on the LQUP jacket, followed by the installation of the living quarter unit, helideck and associated structures in February 2026. So this series of completions represents a decisive push forward, reinforcing our confidence in unlocking the full potential of this strategic asset. Coming to Mumbai High Field, the TSP-1 is already showing encouraging production gains. Additionally, Daman Upside Development Project in Western Offshore is also on track to be monetized soon, with a peak gas output expected at 4 to 5 MMSCMD. ONGC also has a robust pipeline of over 20 major development, redevelopment and infrastructure revamp projects under execution, with a total combined capex of about 77,000 crores. These projects are designed to augment production, sharpen operational efficiency, which will ensure sustained growth. Importantly, 4 key infrastructure and revamp projects are slated for near-term completion. Recognizing the volatility in global crude prices and the need to sustain profitability in a competitive environment, ONGC has already adopted a structured enterprise-wide approach to efficiency and value creation. A dedicated cost council has identified multiple areas where structural improvements can deliver long-term benefits. Key focus areas where progress is there include inventory rationalization, fuel efficiency, logistics optimization, manpower restructuring, and integration of renewable energy into operations. We now come to financials. At the consolidated level, net profit grew by 23%, both on a quarterly and 9-month basis. It was 11,946 crores in Q3 financial year 26, up from 9,747 crore rupees in Q3 financial year 25. For the 9 months financial year 26, the figure was 36,115 crore rupees compared to 29,364 crore rupees for the previous year's 9 months. This increase in profit can mainly be attributed to our subsidiaries HPCL and MRPL. Net profit for Q3 financial year 26 was 8,372 crores, up 1.6% compared to 8,240 crore in Q3 financial year 25. For the 9-month financial year 26, standalone net profit was at 26,244 crores against 29,162 crores in the same period previous year. The increase in net profit during Q3 financial year 26 is on account of contribution from gas revenue, higher other income and lower statutory levy. One point to note is that in spite of the decline in crude oil prices, ONGC's net profit at both standalone and Concall level has been upwards. Sales revenue in Q3 FY26 declined primarily due to 2,145 crore rupees drop in crude oil revenue and a 710 crore reduction in value-added products, which was partly offset by increase of 505 crores in natural gas revenue compared to the same quarter last year. Crude oil prices have declined to $61.63 per barrel in Q3 financial year 26 from $72.57 per barrel in Q3 financial year 25, which adversely impacted our revenues. Crude oil and value-added products declined due to lower price realization, which was offset by an increase in natural gas quantity and price, resulting in a net decrease. The rise in gas revenue was driven by incremental revenue of rupees 294 crores from new well gas sales during the Q3 financial year 26 and incremental revenue of 944 crores for the 9-month period. During Q3 financial year 26, statutory levies stood at 5,975 crore, down from 6,630 crores in Q3 financial year 25, which was a reduction of 653 crore 55 crore rupees, that is 9.9%. This decline is primarily attributable to lower royalty and cess, driven by the decrease in average crude oil price. Operating expenditure in the third quarter of financial year 26 stood at 7,151 crore compared to 6,563 crore rupees in the same quarter last year, which was an increase of 9%. This rise is primarily attributable to our Dahej plant, where LNG consumption grew significantly from 7.68 million MMBTU in Q3 financial year 25 to 11.31 million MMBTU in Q3 financial year 26. Also, there has been an increase in GST on oil services from 12% to 18%, and we have worked diligently to keep our operational costs flat through disciplined cost management, even in this challenging fiscal environment. There is a decrease of 168 crore, that is 2.5% in DD&I cost, which was 6,778 crores in Q3 financial year 25 to 6,610 crore in Q3 financial year 26. This is mainly on account of impairment reversal of 224 crores during the quarter, compared to a small impairment loss of 4 crores in Q3 25. With this strong operational execution, strategic progress and resilient financial performance, ONGC continues to reinforce its contribution in India's energy sector by working towards production growth. With this, I conclude my briefing on the third quarter results for financial year 25-26. We are now happy to take questions and answer them. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. First question comes from Probal Sen from ICICI Securities. Please go ahead.
Very good morning, sir. Thank you for the opportunity. I hope I'm audible.
Yes, yes.
Yeah. Sir, a couple of questions. Firstly, on the KG 98/2, thank you for updating us on the progress of the associated infrastructure. But just wanted to understand now, how are we looking at FY27 in terms of gas production ramp up? Can you share some numbers of where we expect production to be, maybe at the exit of FY27 or over the year? What kind of average output we expect now? That was my first question.
Your question is for KG 98/2 only.
Yes,
as of now.
Specifically.
Yeah. So for KG 98/2, as I have mentioned, we have already installed all the outstanding modules that were pending and which had held up the production of gas till now. All those works have installation of those modules has completed. Currently we are in the process of hooking them up, and the commissioning etc. would take place. Subsequent to that, the wells would be hooked up to these platforms, and they would start to flow. So we expect that the gas flow from these wells should start from the next quarter, which is from April to June onwards, and the gas would be ramped up. Coming towards the end of financial year 27, we would expect that this gas quantum should increase to 5 to 6 MMSCMD.
Got it. And sir, the peak guidance continues to remain at around 7 to 8, which will happen sometime in 28, I think?
Yes, it continues to remain in that range.
Okay. And oil production, sir, is already at around the level that we spoke. I mean, it is at around 25 to 30,000, sir, as of now?
It is around those levels. Once all these works are completed, we do expect that the oil production also should stabilize, and we should have certain additional production coming up.
And the peak there was guided to around 40,000 barrels. Is that correct?
Yeah, 35 to 40 we had 35 to 40 we had mentioned.
Okay. All right, sir. The second question was with respect to, sir, OPaL. Can you just share some numbers in terms of how OPaL's performance has been in this quarter, and any guidance you can share of for 27?
So for OPaL, it has now stabilized. Operations are going on well. They have been performing. They have been operating at more than 90% of that capacity. They have also. They have the average capacity utilization in Q3 was
9 months.
For 9 months was 92%.
Okay.
Revenue from operations was 11,000 plus crores.
Any EBITDA numbers that can be shared?
Yeah,
EBITDA was 353 for the 9-month period.
The 11,000 crore was also for the 9-month period, right?
Yeah. Yes.
So after all the right.
This is for 9.
Just a follow.
No, Prabal, just one correction. 11,000
Yes,
was
sir.
for previous year. For this year, it was 9,790.
9,790 crore was the revenue, and 350 crore odd was the EBITDA for the 9-month period, right, sir?
Yes. Yes.
Yes, correct.
So right. So just wanted just a small follow-up here. After all the cleanup that has happened in terms of the debt and conversion to equity, what is the net debt now that is still sitting on OPaL's books as of now?
It is around 24,000 crore rupees.
So is there any other measures that we are looking to do, sir, or now we expect that the profitability is good enough to service the interest cost, which again probably would still be a few around 1,000-1,200 odd crore on the books.
No, as far as the profitability is concerned, we do expect that the profitability should increase because the capacity utilization should also move up from now onwards. Now that everything has been stabilized, even the petrochemical prices have started to move up, and therefore in the future for 27 we expect that the performance should be more positive than this previous year, than this current year.
So we don't expect to have to infuse any more capital into this as of now, sir.
No. We are not expecting anything on that matter.
Right, sir. One last housekeeping question, sir. Any capex guidance and production guidance for FY27 overall that you can share?
So broadly, ONGC will continue to have that capex of 32 to 33,000. Focus would remain on exploration as such, production as such, and for production also, we'll just give you those figures.
Sure.
Production figures for this year.
Production for
this year.
Next year.
Yeah, next year we will be producing. We are targeting to produce total oil and gas is 42.5 million ton.
Sorry, sir, I could not get. Is that 42.5 million ton?
Oil and oil equivalent, including oil and gas put together, 42.5 million ton.
For FY27, this is standalone numbers, right? Or including JV?
this standalone production.
Perfect. Thank you, sir, for the detailed answers. I'll come back. All the best.
Yeah, thank you.
Thank you, sir. The next question comes from Varadarajan Shivashankaran from Antique Limited. Please go ahead.
Thanks for the opportunity. So if you can give some idea about the discoveries during the 9 months and any reserve accretion which you can actually put a number to.
So reserve accretion figures we would be able to give on the yearly basis only. We normally do that on a yearly basis. We have had discoveries during this 9-month period. If you want a total number of discoveries, we will give that separately. Prakash would be able to give it to you separately. We have been reporting it on a yearly basis as such.
Sure. And any update on the OVL, especially Venezuela, Sakhalin, and Mozambique?
So on Mozambique, the force measure has been lifted. Already work has started on ground over there. Work has started full-fledged over there on ground. So it is on track to start production from 28 onwards. LNG production from 28 onwards. Venezuela, we are awaiting.
Any about the capex, sir?
Capex is same. There is no further increase on the capex now.
Okay.
Another on Venezuela. Sorry, on Venezuela.
Yes.
On Venezuela, we understand that the U.S. government is progressively lifting sanctions or is in the progress of liberalizing the trade from Venezuela and maybe allow other companies also to start operations over there. We are awaiting on those instructions as such, but the movement is in the positive direction, and we are hopeful that we should be in a position to restart our operations once the on-ground and the U.S. sanctions get lifted totally. Sakhalin, there is progress.
What money due to us, sir, from there, from Venezuela?
Money due to 500?
$550 million around.
$550 million.
And
that is the dividend that is. For Sakhalin, we continue to move ahead along with the Russian government also, and with the help of the Russian and the Indian government, we are moving ahead. We have been advised that our share of equity has been secured in that company, so which is a very positive step as far as ONGC OVL are concerned. And we are hopeful that during this coming year, we should be in a position to have a share of our held up dividends, etc. So operations should continue. Otherwise, the operations continue to happen over there in Sakhalin. So production is happening over there. So that is not a issue for as far as the production part, operational part is concerned.
And there will be no change in the shareholding part. What we were holding will continue. We want to
yes. There is no change. It would continue to be 20% off.
One last thing about this production targets which you gave, you can give us a breakup of oil and gas separately as well, and if possible FY28 as well.
Yeah, just one. Yeah, this oil we are planning to produce near about 21 million tons, and gas is 21.5 million tons. This is the breakup between oil and gas. Total put together 42.5 million tons, and we plan to increase the production more than what we are planning for 26-27. We are positive on that, and we'll be forecasting more than that.
Thank you.
Thank you, sir. The next question comes from Mayank Maheshwari from Morgan Stanley. Please go ahead.
Thank you for the call, sir. On the production side, can you just give a bit of details around what's going on for the rest of the blocks apart from KG on production ramp? As well as I think we are still seeing a consistent challenges, especially on the JV side on gas from the production perspective as well. So what's going on there as well? If you can give us a bit of an idea of what are you expecting for this for fiscal 27 around production?
Yeah. Production figures he wants. Morning, Mayank. Just hold on. Yeah, production.
Yeah, in the MH field already we have engaged the TSP, that is technical support service provider, BP, and they already started giving the advice, and we have planned a number of wells to be drilled as discussed and as identified jointly by ONGC and BP. And we are seeing the positive output from that area. So that is giving more stability to ONGC production. Similarly, for Neelam, Hira and BNS asset, oil production are more or less steady is there. So it is giving desired production what we envisage. And similarly for onshore Ankleshwar, Ahmedabad and Mehsana asset, they are there we are drilling number of wells as targeted, and there also production is stabilized. So as such, we are very confident of achieving the target set for this year, and as well as for next year's 26-27.
So Mayank, additionally, as the DUDP project, which is Daman Upside project, is on track, we have already confident that in the next quarter gas should start flowing from this quarter. From March itself this would start flowing. Gas would start flowing from that project. DSF project comes up for the next year last quarter, so that is also on track. So these are the two projects which are going on well and would provide upside, immediate upside, apart from that KG Basin new gas which is about to come up.
Oh, thank you for that. I think on BP technical support that you have got, can you give us a bit more details around how much have you been able to kind of arrest the decline, what is going on there, and what are the positive outcomes that we've seen around that?
Yeah. So the decline has been, if we can say, if I will stick my neck out and say that it has been arrested because it is too early days. But yes, we have seen an uptick coming up. The production that we are getting from MH field, where we have TSP or BP working with us, is higher than it is about more than 100% that we had what we had envisaged. So that production uptick has started to happen, and we expect that they should improve over the coming quarters. So BP's contribution has helped us increase oil and gas from both MH, from the MH field, and it has been MH field has given us about 7%, nearly 7% higher. MH field only. I'm not talking about Western offshore. 7% higher than what we were expecting in this Q3 quarter than what we were expecting earlier on. So it has been a positive play as far as we are concerned.
So sir, is it fair to say that MH field, where you had 8 to 10% decline rates, is now only 2-3%? Is that the right way of thinking?
It is becoming positive.
Okay.
So by the quarter end, I will be in a better position to give you the figures, percentage-wise and all that. But it is already turned positive.
Got it. And so the second question was related to costs. You emphasized on how you are trying to control costs, and then I think previously the CMD had talked about that as well. So in terms of targets that you had given earlier on cost controls, how much of that you have been able to kind of get to, and what you think will get achieved in fiscal 27?
So those targets have not been met because the year is not yet closed, or the period that we are talking about has not yet completed. But we are on track to do that. We have reduced our inventories. We have also taken structural steps to reduce costs in the long run. We have also started off with Pipavav port operations, which reduces our logistics cost as far as the deployments are concerned for the northern part of Mumbai High fields. We have also optimized on the diesel consumptions, and actions have been taken over there. We have been taking action on reduction in our costs as far as manpower security is concerned. So those things have already started to translate into savings, which would be reflected in the annual figures as such. We are also transitioning to renewable energy power, our own generated power or green power that we will be using, which will reduce our power bills also. So all these are on track, and results should get reflected in this annual or this last quarter onwards, further on.
Got it, sir. Thank you. Very helpful.
And if you see, in spite of the crude prices going down very substantially, we have been able to report positive figures both for the third quarter as well as for the 9-month period.
Yes. Thank you, sir. Really helpful.
Next question comes from Sabri Hazarika from MK Capital. Please go ahead.
Yeah, good morning. So I have few questions. First one is, there has been some decline on the share of US gas from 21% to 18% as per your press release. So is it, I mean, can you explain, give more color on that?
21% to 18%?
I mean, what you mentioned in the press release.
Just one thing.
asking. Sabri, just hold on. Your point was that it has gone down from 21 to 18%.
Yeah, I mean, what you mentioned in the press release, so.
Yeah, we have mentioned 18% on our press release. Yes.
So 18% is, Sabri, on the basis of 9-month production, what it is, vis-a-vis.
18 and 21 is on revenue basis, not quantity basis. So revenue to gas का price okay. Revenue गिरी जाएगा ना?
No, he's talking about quantity. So, Sabri, what I was referring was that 21% was on the 6-monthly basis. Now, if you consider that 9-month production, on that basis, it is 18%.
Okay, and it is also on revenue. I have seen this, so it's fine. I guess,
It's on revenue also.
Quantity.
Quantity. Second question is on this. I think the director of production in the India Energy Week mentioned some figure, 4,000 barrels per day of incremental production from this BP, TSP. Could you clarify this? It is too early to actually quantify.
So, as I mentioned earlier to an earlier reply, that we have already seen positive results for MH field because of the TSP. The quantification, final quantification of which we will be in a position to give you at the end of this year or during the annual figures as such. But yes, there has been a positive development in Mumbai High field, both for oil as well as gas.
Got it, sir. Third small question, what was the 9 months capex, stand-on capex for the company?
So we have spent around 24,000 crore, 24,400.
Right, sir. And sir, last question is, I think it's a regulatory question. So we have seen that in the ORDA amendment, a lot has been stated about fiscal stability and all, but the government basically raised the GST in the budget sharply, and there is no input tax credit also. So is there any relief that the company can seek based on the ORDA amendment, or you have to accept it for now?
As far as this GST increase is concerned, we have looked, we don't think it would be possible for us to get that any relief under that ORD Act as such, because GST Act is particularly for all the goods. It's not necessarily for only oil and gas sector.
Okay, anything related to MOPNG could be like that relief could be sought, but this is coming from finance.
So there was no shares increases and all those things. What was happening earlier on us, those things would not happen. There would be no ad hoc subsidy or in-fall tax or something like that.
Got it, sir. Got it. Thank you so much, and all the best.
Thank you, sir. The next question comes from Gagan Dixit from Elara Securities. Please go ahead.
Yeah, thanks for taking my question. I have the question on this Daman upside development project. So what is the expected gas contribution in FY27?
4 to 5 MMSCMD.
Okay, so full number that we expect in FY27. Okay, sir. And
yes, because all our project is on schedule. Drilling also is already being done. Already some wells would get hooked up immediately. So we are from March itself we will have gas coming up in phases.
Okay, sir. And my second question is, you mentioned 4 major infrastructure projects that's nearing completion. So which are these, and what is the incremental production that they unlock over the time, sir?
So the projects which were mentioned, basically, those were mainly, one was Daman, what we were talking about, which already sir has spoken. The rest of the projects were infrastructure projects, what we are referring to.
Okay. Yeah, that's from me.
And Daman, actually, if you see, it's already completed around 94%.
Okay, sir. Yeah, that's from my side. Thanks, sir.
The next question comes from Vivekanand S. from Ambit Capital. Please go ahead.
Yeah, thank you for the opportunity. So my first question is on the investments outside of E&P. So you had invested in INR renewables, and you had highlighted targets for 2030 in terms of the gigawattage output that you expect from renewables. Can you give us an update on that and the CapEx commitment for FY27-28 each year? I believe your CapEx guidance is only for standalone. If you can help us with this number. That's question one. I'll ask the next one after this.
Okay. For INR Renewables, it continues to be on track for, it is producing electricity from wind farm as solar projects which are there already. The projects under execution are continue to be executed. They should be completed within this coming financial year. As far as the additions to all the targets that we had indicated for 2030, yes, those stand at 10 gigawatts stands for 2030, and towards that end we are already looking at projects which we could acquire. There is one project which we are setting up, 300 megawatt project, solar project that we would be setting up as a greenfield on our own, ONGC as of now. So our targets remain in place and we continue to be on more or less on schedule for this thing. Would you like to add anything?
Okay, it's okay. Any specific question we can reply?
Yeah. That's it, Vivek. Anything further you want?
So, is there any CapEx guidance you want to provide for FY27 and 28 as far as renewable investments?
So, these targets would be for this renewable, it would be more of whenever we get opportunity, we would be making those acquisitions or taking over those projects. So we have not kept a target, but we are open to for up to 10 gigawatts. We would be working on that. So capex is not a problem for us.
Okay. The next question is on the petrochemical investment plans. So you had been in talks to set up a greenfield refinery in Prayagraj in UP, and more recently, I think Chairman Sir also commented about the petrochemical story in the India Energy Week. Any concrete plans or any thoughts that you want to share here with respect to the negotiations for the Prayagraj land parcel, the investment outlay that you are planning, and any timelines? Thank you.
We are already working on the various projects. We are contemplating and working with the partners, but still, as of now, no concrete plan has been declared. As regards to Prayagraj, there is a land parcel available with BPCL. So we are in the talks with BPCL and with the UP government. The plans are being worked out, techno-economics are being worked out, but no firm plan as of now.
Okay, thank you and all the best.
Thank you.
Dear participants, if you have any questions, please press star and 1 on your telephone keypad. Next question comes from Saket Kapoor from Kapoor & Co. Please go ahead.
Yeah, namaskar, sir. Hope I'm audible.
Yes, please.
Yes, sir. Yes, sir. Sir, the question is pertaining to the capex part from the PSU. When we are looking at your ancillary companies, suppose a pipe manufacturer, the seamless pipes or the drill price or the rig prices, everywhere we have seen softness. And also, when we look at our historical data, there are quarters post the December when there are a lot of supply demand being generated from the existing fields in terms of the pipe orders being tendered. So that has not been the case for the current year. So can you give us some outlook on your spending or your on the pipes for the rigs for the wells which are already in output, just to improve the output there?
Yeah. Management.
Yeah. So our capex program is on track. As we have already mentioned, we continue to have capex of 32,000 crores for our company, and as far as our ordering etc. is concerned, it is on track for meeting our capex as such. So we are not in a position to comment upon what about the other companies are concerned.
Right, sir. But when we hear the output part, the oil output from the country and all are on declining trend also. Correct me there if my statement is incorrect. So going forward, what should be the output guidance from the management in terms of the existing oil fields and also which are in the exploratory stage?
So as we have already mentioned earlier on, 42.5 million metric ton is the oil and gas equivalent that we are targeting for this coming financial year.
Right, sir. So I'll join the queue. Thank you.
Thank you.
The next question comes from Vikas Jain from CLSA India. Please go ahead.
Hi, sir. Thanks for taking my questions. I just wanted a little bit... Morning, hi. Sir, just a little bit more details on each of these production projects and where they would take us if we try and visualize quarter by quarter or half by half. So KG 98/2, you said production should start flowing in a couple of months, say starting April to June, that quarter. And the ramp up, the incremental 5 to 6, I think we are already at about 2 MMSCMD or so. So the incremental 5 to 6 will take 3 to 4 quarters. Is that what you said?
Yeah, well, I said from April till April we will be doing this ramp up, etc., and subsequently it should start coming up to 3 to 5 MMSCMD. Additional की बात कर रहा हूँ.
Okay, additional आप बोल रहे हैं fourth quarter तक, yeah, is what you said.
Yeah. Yes.
Okay, and Daman, you said the start will happen in March, and it will ramp up to the 4 to 5 very quickly. I mean, within a couple of months itself. Is that the likelihood over there?
In a quarter it should happen. July quarter it should definitely be there.
Okay, so all in all put together, say sometime by between December and March of December 26 and March 27. So say by July quarter we'll have an extra 4 or 5 from Daman, 1 2 from about 1 or 2 from KGD6 by June, July, and then by somewhere by the fourth quarter we could have a total of incremental 10 MMSCMD from these projects, right?
Yeah, because by that time, Vikasji, our TSP would be also there. So more positive things. Yeah. So more positive things we can expect.
Yeah, your understanding, Vikas, is broadly in line.
Yeah. And sir, MH field coming back, I just wanted to, maybe I was thinking very quantitatively, when you people were saying that it has turned positive, to the question that what is the decline rate? Is it that you've been able to arrest the decline as compared to the earlier rate of over 7-8% decline of the MH field? Is that what you mean by it has turned positive, or it is just that the decline rate has reduced? Because maybe I was thinking too quantitatively about the positive comment.
No, positive is positive in the sense that it is the decline has been arrested. There has been an addition to that, but figures we'll give you at the end of the year.
Okay, and so just to understand, so this field was declining at over left to itself about 6-7% every year or more. Was that the case?
So broadly, what happens is you estimate a decline because you can't project how much the field will decline over 10-year period. So broadly, it was being said that this is declining from 6 to 8% annual basis. That is what we were expecting this field to decline, and accordingly, had looked for getting measures to arrest that decline. There was a profile which was agreed to between BP and ONGC that this would be the base profile if we do nothing case sort of.
Sure.
This is how the production would decline, and now we are getting production. So BP is actually to give us production beyond that decline. What they have committed is 10 million metric tons over a period of 10 years.
Okay. So you can say that the early gains have already started because versus your projected, production levels, we are doing better.
Yes. So if you remember, I have been saying for the last 2 quarters that we are expecting BP or the TSP to give us positive results from the fourth quarter of this financial year, which we are already seeing it. And for the year end, I think we should be in a position to give you those figures also.
Sure. And new well gas, if not talking about 9 months, not talking about 6 months, but if I were to look at the exit rate right now, and maybe whenever the next recognition of incremental production is, say, April or somewhere, that new well gas would be what share of output, say, from around April, as per your best guess?
So we would expect that every year or every quarter, this percentage of new well gas should increase, because what happens is for the existing fields, we would be working over the existing wells. If they stop, we will work over them, or we will be doing certain other jobs which will increase the production of the existing wells and the field. So that becomes the new well gas. What we are expecting is that we should have an increase in 2027. Now we are at 18%. We should increase up to 24% or something like that.
Sorry, 24% from April onwards.
New well gas.
Yeah, new well gas will be
24%.
Okay, for the year. Okay,
it will not.
Okay, over the next 3-4 quarters, you say.
We just say 18%.
Sure, sir. Understood. And sir, just to get a confirmation on the pricing, KG 98/2 will of course be HPHT, and Daman will be what pricing?
NWG.
NWG pricing. Yeah. Okay.
Yeah.
Thank you so much, sir. Those were all my questions.
Hello. The next question comes from Ketan Mehta from Baroda BNP Paribas. Please go ahead.
Thank you, sir, for the opportunity. In our target for FY27, it's 42.5 million ton. What are we assuming about the BP at this point of time? Is it a continuing decline or a zero decline for FY27?
Sorry, I'm getting your question.
I was asking in terms of the Mumbai high production field, what is our assumption for FY27 when we have shared in our target 42.5 million ton?
So for the 42.5 million ton, we have not considered any contribution from this TSP project.
That would be an upside. That's
upside. Yes, it would be an upside.
Sure. And in terms of the BP TSP, would you be also able to share the number of wells that we plan to drill and what would be the investment during FY27?
No, as of now, no. Because that is still work in progress, what we are doing. And once that gets finalized, then only we will be in a position to communicate about the details about the same, which we should most likely maybe in the annual results we would be able to tell you. That's why I said the figures also we would be able to tell you around that.
Sure. And in terms of the value creation that we are approaching, would we be able to give more color on what kind of numbers we can achieve during FY27?
For the production figures, are you asking me?
Efficiency and value creation bucket that we have spoken about.
On the cost control?
Cost control, yes, sir.
So we are targeting that we should be reducing our costs by around 1,000 crores by the various measures that we have undertaken now.
So this is additional 1,000 crore target over and above the measures that has been undertaken during FY26. Is that a right way?
It is a continuation of those measures that we have taken in 26.
Sure, sir. Thank you.
Thank you.
The next question comes from Ramesh, an individual investor. Please go ahead.
Thank you. So if you were to look at your new well gas, I understand that it's going up from 18 to 24%, right, in terms of the share of overall gas production. So you will get the incremental upside in the gas price on the addition of 6% on a weighted average basis, right, on your new well gas. Is that the right way to understand that?
There would be an increase in the percentage of this new well gas as a percentage of the total quantum of gas produced. Another thing from the nomination fields. Another thing is that the price that we get would be 20% higher than the price that is given to the APM gas.
Yeah. On the pricing, I understand. So basically, in terms of the growth for next year, if you are expecting the share of your new well gas to go up from 18 to 24%, on that additional 6%, you will get the market-based price based on the 20% higher price, right? That's the way to look at that, right?
The market-based price, it will be getting up to that 12% of the slope, Indian crude plus.
Okay. And if you look at beyond 27, is there any further increase possible in the share of the new well gas? If you will have to.
Yeah. Normally, what we are expecting that every year we should have additional incremental gas, new well gas coming up from these nomination fields.
Even if we maintain the production, we will have an uptick of around 7% or so. And in addition to that, let me tell you, currently it is at 6.75 from April 1st. That ceiling will also go up by 25 cents, which will be at $7.
Okay. Okay. The second thought is, if you look at your segment numbers, the petrochemical loss has come down. So, do you have any line of sight in terms of when you would be able to report a positive number for the segment results from the petrochemical segment, given the kind of efforts you have put into, restructure the feedstock and improve the product mix? When do you see that happen?
With this petrochemical prices moving up and with the other costs under control, we are quite hopeful that we'll continue to be EBITDA positive for the full year next year, and hopefully we should be turning the corner also.
So would that be visible from the first quarter itself or more likely from second half?
So EBITDA positive, we already EBITDA positive currently also. Okay. So we will continue to do that. Whether we turn the corner in the next quarter or the next year or subsequent, that would depend partly also on the petrochemical prices such.
Okay. So one last thought, if I might squeeze in. On the ethane sourcing arrangement you have with the ethane ship and the agreement with Petronet LNG. So, I know you can't possibly get into the commercial terms, but in terms of the ethane sourcing, are you in a position to confidently have a line of sight in terms of the quantity you want? And what would be the pricing mechanism for that? Would you import it on a CIF basis because you have the ship, or how would you go about fixing the commercial terms? And because that would have an impact on the economics of using ethane for your petrochemical production. So broadly, in terms of the availability of the required quantities, what proportion of the naphtha you can replace, and what would be the broad approach to the pricing?
Well, let me come back to you. See, the OPaL plant uses basically two feedstocks, 60% naphtha, 40% ethane. So we are trying to engage this 40% ethane beyond 2028. Terminal part has been fixed shipping arrangement has been made, and we are in the process of fixing up the sourcing issue. So the quantity would be of the order of 600 KTPA. Pricing and all we will declare at a later date.
Okay, thank you very much. Wish you all the best.
Thank you.
The next follow-up question comes from Saket Kapoor from Kapoor & Co. Please go ahead.
Yes. Namaskar, sir. Hello.
Yes, please.
Yes, sir. Sir, just I'm referring to two new discoveries for Suryamani and Vajramani. So where are we, sir, in terms of the exploration activities and also for the Mahanadi Basin, sir? I think so. Some discoveries were made in the MNDWHP 2018 block. And sir, secondly, we had some tie-up with जो हमने सर BP के संग किया था, जिससे जो old हमारी oil fields है, उससे हम अपनी yield improve करेंगे, या जो आपका substrate well में है, उसको बाहर निकालने की बात थी. So वो venture अभी कैसा progress कर रहा है, उसपे अभी हमने क्या capex किया है, यदि उसपे कुछ जानकारी देते.
तो आपका दूसरा प्रश्न पहले उसका जवाब देता हूं. बीपी के साथ जो हमने ये साझेदारी करी थी, वो उसका अभी हमें फल दिखाई देने लग गए हैं. जैसे मैंने कुछ देर पहले ही बोला था कि इसका जो मूल्यांकन होगा वो हम इस साल के अंत तक कर पाएंगे और उसके बाद ही उसको सबको बता पाएंगे। बट अभी तक के जो हमें मिले हैं वो बहुत ही अच्छे और पॉजिटिव हैं। Coming to your first question on Surya Money and Vajra Money, we'll have.
Sir, regarding this Vajra Money and Surya Money, the oil potential we have analyzed, and being a marginal field, we are evaluating various options, including new way of installing the platforms, which becomes techno-commercial viable. It is the west coast.
Both are in the west coast only.
And on Mahanadi
also. So the Surya Money and Vajra Money are both in the western offshore part of our fields. Regarding Mahanadi Basin, what was your question? What is the discovery as such?
Yes, sir. Discovery as such, and when are we trying to explore? कितना capex करेंगे इस पर?
So discovery or the development part of it will take some time. We are currently doing that. Development plans are being made up. Once those are finalized, we would be in a position to indicate how much is the cost or the capex that we would be incurring for these discoveries to be developed fully. These are still in the preliminary stage, and maybe in the next year we would be in a position to have our capex plans formed up.
Okay.
We have to drill some appraisal wells, etc. So all those things would be finalized, and then accordingly we'll prepare the development plans.
In my previous question also, I have inquired about what kind of order tendering we have done in terms of especially the seamless pipe segment. If you can give me comparable numbers for the current financial year with the previous year, and for going ahead, what have we outlined in terms of capex that will be attributable to this category? I think so these are consumables for us. If you could just abreast on the same.
These are, as of now, I would not be in a position to give you those figures offhand as such, because normally an analyst call will give you all details about what are the major plans, etc. So we restrict. We don't have those details with us. We will have to get it all those things.
Okay, sir. I'll take it then. Okay.
So the next question comes from Vivekanand S from Ambit Capital. Please go ahead.
Right, sir. Thank you for the follow-up opportunity. So as far as OVL is concerned, can you give us an update on the dividends that you expect from there, and any status on the money that you should have by now repatriated to India? What is the status of that? Given the geopolitical tensions, I believe there was some money that was stuck there. That is question one. And the second one, if you could repeat the update on the new well gas revenue contribution. I think Sabri had asked earlier that you had mentioned in the 1H results that the revenue contribution was 21%. But in 9 months, the revenue contribution declined to 18%, suggesting meaningful fall in new well gas revenue contribution. Yeah, those are my two questions. Thank you.
Okay, just hold on. Okay. Just hold on. Vivekanji, we do have Mr. Rajshri Gupta, who is MD of ONGC Videsh, so he would respond to your query.
A very good morning to all of you. The question was asked earlier, and as we said that our interest in the Sakhalin-1 project is secured, and we are in the project. The productions and operations are normal. The standard dividends of Bangkok from the other field which we was there, that has also been utilized for our internal resources. So we are okay in that part of the world, and it's now more or less normal. Yes, the geopolitical tensions are going on, but we do hope that there will be a resolution sooner than later.
Regarding NWG, just give me a minute. NWG is 5,028 out of...
What was mentioned earlier was, as was already clarified, I think, that it was on the H1, the 21% was on the H1 figure, and this 18% is on the 9-month figure. So for the H1, we had about 3,352 crores to be precise as the new well gas revenue upon a total revenue of 15,000 odd, which comes out to around 20-21%. Whereas in this case, in the 9 months, it is 5,000 plus crores of new well gas upon a gas sales of 23,000 odd, 24,000 odd, which comes out to 18%. So there has been incremental addition to the new well gas, but as a percentage of the total gas revenue, the percentage has come down. So it is more of statistics than anything, but it moves upwards.
Right, sir. Why has it come down?
So there's a difference in the gas price.
Yeah.
New well gas price and the quantum of other gas, etc.
Baki Vivekanji, we will just put out that NWG gas sales figure also, so that would help you out to work out. Okay?
Yes. I think that would be more helpful, because I think might be related to HPHT contribution, maybe.
Yeah, that's also there.
It is possible, but yes, it would be great if you can put that number out.
That is how it is, yeah.
Okay, thank you so much.
Okay, thank you.
The next question comes from Somaya V from Avendus Spark. Please go ahead.
Yeah, thanks for the opportunity, sir. So the question is on the production outlook for FY27, the growth that we are building on a YOY basis. So if you could just help us with one, what is the natural decline rate that gets built in? Two, in terms of projects, Daman and KG Basin are the two major ones that we are factoring in for growth.
Yeah, we've already mentioned this thing. I'll repeat it. For KG, we have already mentioned that all our modules have been installed, and now we are doing the hookup, commissioning, etc. will be carried out. And from this next year onwards, we should have the gas flow coming up, and we would have 4 to 5 SCMD from KG Basin in the next year. For Daman upside also, we have mentioned that our wells have been drilled. We are in the process of drilling. We are in process of doing the jacket and well platform installation, etc. We are expecting first gas to come in from this March itself. And for the next year, we would have again another 4 to 5 SCMD of gas coming up from Daman upside project as such. As far as the targets are concerned, whenever we give the targets, those we do factor in whatever are the likely reductions or expected declines for those fields and the measures that we are going to take. So it is not that we would have just a reduction coming up in all the fields. There would also be actions that we would have taken, drilling of wells, we would have done EORs, etc., which would take care of the targets that are to be achieved.
So, just wanted to understand what would be at the blended portfolio level, what would be the decline rate?
So broadly, you can consider that this would be around, depending upon the fields, this can be around 6 to 7 or 8% declines on a normal basis, but fields do behave differently. If you see other fields at other places also, declines have been very sharp. It depends upon the field, it depends upon how much you are extracting, it depends upon what processes you are using,
vintage of
the field, etc. So many factors which contribute to the decline in production for fields as such. Broadly, we have been considering it to between 6 to 8%.
Got it, sir. So the question on the projects was, are these two the only major projects that we are considering in FY27, or is there a few more projects that gets built into this FY27 outlook?
So DSF2 project is coming up, which is again a gas in the west coast, and we are expecting it to come on stream in the last quarter of the next year.
Got it. Okay. Thank you.
Yeah. Thank you.
Thank you, sir. There are no further questions. Now I hand over the floor to Shri Vivek Tongaonkar for closing comments.
Yeah. Thank you very much, Madhuri. Thank you all participants for being on the call with us, and we do hope that we would have replied to your questions. Any further details, you can be in touch with our IRC cell over here. I would just like to mention that as we have been saying earlier in different various calls, that TSP, we are expecting positive results, or we would be getting certain results in the last quarter of financial year 26. I have already mentioned we are also getting positive results, and we would be in a position to quantify that at the end of this year. Secondly, our KG Basin 98/2 project, which had been delayed because of certain reasons, which has now we have now been able to install all the modules over there. The hookup commissioning works would be underway, and we do expect gas to start flowing from the immediate in the beginning of this coming financial year. DUDP is also on track. Our gas we expect to flow from this March itself. So those are upsides that are there. And I think one major decision which the board has also taken is to announce a dividend of 6.25 rupees per share. Considered with the first interim dividend of 6, it is a total amount that we are giving is 12.25, which was the dividend that we had paid for the previous year. So on an interim dividend basis, this is the highest cumulative interim dividend that we have paid. It signals a very strong, we are very quite positive about the future of this company, and we are also taking care of our stakeholders so that they get optimum returns also. So we do hope that this would the stakeholders would also welcome this. This was one long-standing demand from the investors also about the returns or the rewards that are given to the shareholders, and we think we would be in a position to reward the shareholders in the future also. Thank you very much.
Thank you, sir. Ladies and gentlemen, this concludes your conference for today. Thank you for your participation and for using Doorsaba's conference call service. You may disconnect your lines now. Thank you and have a pleasant day.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.